Given all of that's going on, Stan Sharmu joins us now live from IG in Melbourne. Stan, it must be tough to make an opening call then on the ASX 200, given we're not quite sure what's going to happen.
Yes, absolutely. I mean, of course, it's really compounded by the fact that on Friday we had a pretty good run in Australia, managing to really break through some key resistance levels and rallying to the highest level in about 19 months. So, considering the fact that risk assets completely deteriorated through US trade, with the euro, for example, dropping way below that 132 dollar yen, dropping back below 86. It really does seem like we're in one of those situations where investors are happy to take a bit of caution, take a bit of money off the table. Of course, it's been a pretty good last 2 months or so, and fiscal cliff negotiations, of course, are the dominant theme. Of course, it's a headline risk market at the moment, and it's really hard to get a good read without knowing the outcome. Of course, now all we know is that President Obama has really ramped up the rhetoric and is really pushing these Republicans and trying to get through a deal that favors that's more in line with what he's looking at. Of course, at the moment, a lot of analysts are now feeling that we might actually not get a comprehensive solution before tomorrow. Some analysts feel we'll get a bit of a patch-up deal, something that involves obviously the tax breaks and at the same time some sort of entitlements for the unemployed, because that's, I suppose, really the crux of the matter. That's where most of the disagreements are stemming from. So once we actually get something more definitive from the meeting that's going to take place in about a couple of hours or so, then it will probably be a bit easier to shape up the session. But so far, our call, just based on Saturday morning's close, is down about 1.1% at about 46.19. Of course, this doesn't really factor in anything that's happened since Saturday, so it's really hard to get a good read with futures still closed till about 10. So at the moment, I suppose we have to look at the risk currencies, and they haven't really done much, which indicates that everyone's sort of in a wait-and-see mode. I think the only real move was the dollar yen at the reopen, which dropped below that 86. But for all intents and purposes, I don't think it's worthwhile mentioning, considering Japanese markets are also closed for the next 4 days. I suppose locally we've got the private sector credit data, which is expected to show a 0.3% gain. And of course, some feel we might get a slightly better read, mainly because of the recent rate cuts and some seasonal factors from the festive trading season. That might really bolster that figure as well, and show that there's a little bit of confidence coming back into the market, and that might be a little bit positive for the Aussie dollar. But the overarching theme will probably be what comes out of this, the comments that come out of this meeting that's about to take place. At the same time, we've got the miners looking like they're in for a much weaker start. Of course, they had a pretty good run last week. Iron ore remains steady, but the rest of the commodities space came off a bit, with the US dollar gaining strength against most of its major peers. At the moment, we're calling BHP down about 1%, back into that 37.04 region. So that's quite disappointing, considering the big run it had last week. But I suppose with iron ore stabilizing, it's only a matter of time before we start seeing a solid improvement in some of these iron ore names. Gold pulled back, so we expect to see some of the gold names continue to struggle. But apart from that, the news flow is relatively limited. Of course, we've got the New Year's break tomorrow. We still have a lot of market participants away from the market at the moment, so volume will continue to be low. It's a shortened session at the same time, so there's not much to go on. We do have the China HSBC manufacturing PMI due out later today, expected to come in at that 50.9. There's nothing much in it. Of course, this is just the final reading. We've already had the preliminary reading come out, so I don't think too many people are expecting a surprise from that front as well.
Stan, I guess given that this New Year's Eve, it's timely to have a look at the market performance this year and what to expect for 2013. And the ASX 200 has fared pretty well. What, best yearly performance since 2009?
Yeah, I mean, we've had a lot of hurdles to overcome this year, so it's quite surprising to see the market up 15% for the year. I mean, this is as of Friday's close, so this might come off a little bit today. but still it's been mainly led by the financials, and that yield play has really worked out very well for a lot of investors this year. They wouldn't be complaining at all. I mean, we've seen stocks like Commonwealth trade above $60. I mean, that's quite impressive. At the same time, though, it has to be taken in stride. We've seen the materials struggle, so if we had seen a bit of a kicker from that part, we probably would have seen an even better year. But for all intents and purposes, considering all the European issues we had to contend with, all the US issues we had to contend with, and the elections as well in the US, it just seems like we've done very well.
Stan, great to get your thoughts as always. Yeah, an interesting day still, of course, to play out. So we'll be chatting to you, no doubt, throughout the rest of the session. Thanks so much.
Cheers, Ray.
Well, to some corporate news and advertising.